so I'm going to start off with last night's trade I took, which was in the dollar yen and CAD yen. So let me do CAD yen first because that's the first one I took. So CAD yen, I thought, okay, we're gonna. It was more of an impulsive trade, to be honest with you. I was looking for any reason to get in, but I thought, okay, since every night they've been selling off, I thought China news was gonna make it sell off more. So I had an order in here around 80s, and I got stopped out on that. Got stopped out on that, and then it did tank later on, but yeah, I got stopped out on that. I still think it's gonna go lower, like I mentioned, to this order block here. It's filling in all this inefficiency now. So 81.40s is where I think it's gonna go. So going forward, I'll still be looking for that target. So the next short setup I get, it'll still be the same target. All yen pairs may really, apart from euro yen, I'm not so inclined, but commodity yen pairs and pound yen, I think they're gonna drop further. So that's just basic. Dollar yen as well, same thing. So once I got started to CAD yen, I thought, okay, it's done this, and it's come off this block here nicely, and I shorted it, shorted it around here. I posted it, and I thought it was gonna sell off. Fell a few pips and then went back up. What I should have done was I should have closed this, because if this was a genuine stop trade, right, you usually get a price sell off quite quickly. You don't get it hanging around. So it popped up, and I said, okay, if it breaches the 30 level, I'm gonna cut it in half, and then I'll leave the rest in. And then I woke up and it was stopped out, and that's that. So going forward, I woke up late for the London session, but I did tweet when cable was around here that I'm expecting cable and Kiwi to sell off. Why was I thinking that? Well, if I'm gonna switch the Kiwi chart to my other broker, because Forex LTD is a bit messed up. I'll speak about pound dollar. If you look at pound dollar, right, I mean, the fact that it took out these lows here, which was the monthly lows, which was here. I know it's a bit messy right now, but just this low here took out, and I thought maybe we'll get a bounce up there. So earlier on this week I was talking about this level 45.65, 45.70, and took that out. But if you look at it, right, even though it bounced up there, I thought, okay, usually if you get turtle soup, especially monthly, you expect a rip up. Now even with the dollar weakness that was unfolding at the time, cable just was reluctant to push up. So that puts me on alert. Hang on a minute, this market is still weak. Now if we look closely, I spoke about, the stops haven't been raised for ages. Look at the daily highs of each day. They haven't been tested in ages. You can see that on the chart. It's just falling. And the only real test we got was yesterday, and it popped up, took out these highs here. But then, what did he do? It came back down, broke market structure to the downside, and that just put me on alert. Okay, this is gonna go down. But I'll be honest with you, I wasn't confident on shorting it, so that's why I didn't take it. Hindsight obviously worked out, but I wasn't confident shorting it. I just wanted a bit more of confirmation, so I thought maybe after NFB. But the thing is, it's Friday prayer, so I'm not at the charts. I have to trade from my phone. Don't really like trade from my phone because you can't really see everything. But I go through what unfolded. So if it wasn't confident on shorting here, so if you go to 15-minute, you can see, well, we've got that block here, run up, turtle soup during Asia. Asia is usually reluctant to make new highs, so usually in general, when Asia starts hitting resistance, more than likely it's going to come back down. Not much volume behind it, so you can sort of like scalp Asia or something. But that's something Chris Lowry goes into. I don't usually do myself. I rarely do it myself, unless with the majors, unless it's Aussie dollar, New Zealand dollar, and yen pairs, because those are Asia session currencies. So it's come back, taken out the high, and it does go into a block here. It goes into the H1 block, so that's perfect. If this was a London open setup, this is actually a nice sell. And then if you're not confident to shorten that, you wait for the breakdown. It breaks down here. So when I spoke about the blocks tagging each other, so that's the block form. They sold within this block here. Actually sold it within here, but then the sell-off started here, it broke down. So okay, fair enough. You don't know if this is gonna hold or not. And then it comes down, breaks this low here, and then you look for retracement back up. It retraces back into this block here, and this is like a typical sell. Keep your stop losses above there, because that's the stop rate. There's no reason for it to go back up there. And you could have sold it, aiming for the filling in of inefficiency. So I thought at least the inefficiency is gonna get filled in, and obviously it went lower. So the confirmation for you to sell it came here. So if you go to the 5-minute chart, So we go down to the 5 minute. I hate when it does this. So 15 minutes will probably be clearer. Okay. Yeah, so if you look that right, this 15-minute block is acting like a bullish block at first, and then it reverses its role. So you can see this 15-minute bullish block, right? So price comes here, holds this block here, and it runs up, takes comes back down, mitigation block here, holds that, forms an order block, and runs up. And then usually, if I'm in a bullish trend, this is where I look to get in long. Stop loss would go just below that. If it breaks that, then obviously it's failed. And it gave about 20 odd points. So if you're short-term scalper, that's 20 points there. It breaks down. Now when it breaks down, rolls are reversed now. That's the whole block there. And it breaks down, retests it. Now you can get it refined it within the 5 minute. So I usually like to see an order block form just to show me the selling. Depending on the situation. Some situations, I'll sell it blindly at the retest if there's fast momentum in the market. If there's not, then I'll wait. So it comes back down and then it forms an order block just before it breaks. So it's here, the selling here, then this is the impulse leg that sells it, retests it, but it's NFP. If you're not positioned, and it's not really clear, you don't really want to be gambling with the NFP. But this, once the dust settled here, this is the spike down and then went to back up, and then it's just consolidating and it's holding below that. The fact that it hasn't rejected this, filled this inefficiency or gone back up, that's a major sign. Get ready, this is looking weak. And so there's multiple opportunities to have sold here, and that would have been the sell-off. And obviously, where would you have been targeting the lows here? And if we look at extension, does it reach an extension? So different profit target projections, 127%. I also use the 138. That's a fib extension that I've learned of Chris Lowry, the 138. Have a look into it, do the 138. It respects it quite often. And I still think this is really weak. I mean, it's just holding these lows. I'm not sure what fundamental reason there is behind it, but it doesn't really concern us. But to me, it's still weak. So that would have been the entry for cable. I didn't take it, but I'm just pointing it out anyway. Now compare that with what the euro did. Euro, I spoke about this 4-hour block holding. I thought this was going to hold, and during Asia it was going to hold, but I'm not going to trade euro during Asia, And if you did trade during Asia, it did give a sizable move to just pay yourself something if it's short term. But this is why I don't trust trading Asia that much. So it came down here and then it buys in 25 ticks. Usually if I'm up 20 ticks, I'll trim something off. But in the morning London session, come down to this block here, which is still within that 4-hour high time frame block, but it's just a refined block here. So 15 minute, and it bounced nicely, ran up 40 odd points. But the thing is, right, if you look carefully now, you can see this happening. Go to the 15 minute. When I see these sort of blocks getting respected, that puts me on alert now. Like shit. So it's held this, sold off here, rallied up, and then rejected back down immediately, which just tells me that this is a stop trade because it's rejected back down. Now let's go deep into it. For an NFP play, you've got, so this is the bearish candle, and then it runs up, takes like these short-term highs here. It's just short-term. So if you're not confident in selling this is why breakers. I've been taking so many breakers lately because they're just easier for me anyway. And then again, you see again breakdown now, and everything's been respected to the bearish side. So ahead of NFP, if you wanted a punt, this would have been a nice one, because what you've got is you've still got this inefficiency here. These lows are quite flat. When you see flat lows, go back in your charts, right? When you see flat closes like this, they often get taken. It's something ICT mentions. You want to see spikes like this, but when it's flat, they're quite vulnerable. But if you wanted to play short term, at least from one block to the other, shorter there, targets, take a stop rate into a block, perfect, and that would have been the long. So comes into a block and then runs up again and back, targeting a high. But that's just the euro play. Okay, that clear so far. These are trades I haven't taken, but I'm just going over it anyway. Clear. Yes, no, maybe so. Okay, so New Zealand dollar. This is one I really want to be on board, but I missed it when it was dropping. Um, I don't know if I'll screw this one. I'm not gonna chase it, but so let's see what happened here. This is why I really like this setup. So during the last night, we had a run up, and look what it goes into. So they were buying here. So when they were buying here, right? This is textbook ICT setup. This is so they're buying here, pushing up. This is the fake move up, trying to get long sucked in, and then you create a little short-term high here. And let me just zoom in a bit. It's a bit small. So short-term high here. People say, "Oh, breaking market structure," trends up again, and then it sells off, but they're still holding the longs from here, and then push market down, and then building all these stops down here. Even though this stop got taken, I thought maybe it's gonna sell off from here, but when it doesn't reach this, I'm prone unless the market is really really weak, it'll sell off. But if it's still hanging around, then you gotta be on guard for. I'm gonna mean they're still holding these longs. You gotta keep in mind they're still holding these longs. So what did they do? They run the market up, unload the longs they had on, and put heavier shorts on. When that happened, it was game over. Then I knew it was gonna drop because I had in mind this block here, obviously, and then now it's going lower. But minimum, I would have had this and this low here. I've been speaking about 65-70 for a while. If you look back at my tweets, and with all this geopolitical stuff happening, the commodities get hit. And it's currently when the indices are falling, Aussie goes down, Kiwi goes down. So that's why I said commodity yen pairs are probably the best place, and you've seen that yourself. So this morning, typical London Open. So it comes up here, these highs here, it runs up, takes out this high into a block. Now this is how you would have played the turtle soup. Literally, this is what I like about turtle soup. You'll know you're wrong quickly. If you're wrong, you'll know you're wrong quickly. And the stops are really tight. So if you think about it, so I marked out this, right. This is the 50%. It couldn't even reach the 50%. But so I would have marked this out if this was me, like if I was awake for London, the early London session anyway, the early part of it. I would have marked this out 50%. Now that's the 50% of this block here. So it comes up and then fast. It's a thin movement up. It's really nice to see a thin movement price up, because that's when people get suckered in. So they're thinking, okay, and a lot of people think this is respecting blocks as well. So if you think about it, well, this block is getting respected, and this is getting respected here, and this is a little 5-minute harmonic pattern here as well. It's going up, and it's going up. Oh, I'm not sure, and then boom, they get long, and then they're up a couple of pips, and they're happy. And then this is what you want, because then you sell it as soon as it breaks this high here. You sell it, or you can wait a little time, and then even if you just enter on a bearish candle. So for example, sometimes you'll see me, I went right at the close of a bearish candle. So if I'm not confident, so in this scenario I would have taken it here, or if I see price hanging around here, then I'll say okay, maybe on this close here, and my stop loss would have been just above here. So if you kept a stop loss here, that's a 16 pip stop loss. That's reasonable for me, so I probably would have kept it here. But if it's a bit wider, then I'd say okay, a couple of pips above the so normally what I would do, I would keep my stop loss here, but I'd say okay, if it breaks through this and doesn't reject, then I'm looking to cut it off completely. So my mental stop loss would be here, but this is just a hard stop loss, because sometimes you get those reactions up and then quick move down. So in this scenario, that's how I play it. So and it held, and then it took those stops out, and then it rejected. And when that happens, this is just a stop rate. The bias for lower prices is still on. You have clean lows building here. Overall bias is still short for this. You got clean lows here. So different ways of taking profits. Trim some here, trim some there. You can do the rest yourself. But that's how I would have played it. And cable and Kiwi were the main one, and New Zealand yen as well. So if we look at this here, so those that missed this move here, the level hasn't still been taken at this point, so it's coming acting as a bullish block here. Rallies up, breaks down. What's this doing? Roll reversal, reversing its roll, isn't it? Sell it. Going to the lower time frame, is there more? Some people want a bit more confirmation. Well, rallies down. It does take out the stop loss here, so if you sold it blindly here ahead of NFP, then you would have hit your target here for 37 pips. Stop loss would just go. I would keep my stop loss here at 12 pips. The reason why I would have taken it at NFP is because it's not just Kiwi lining up. Cable was setting up, and so was Euro ahead of the NFP. So that just tells you, okay, more than likely, if all the majors setting up for a short, then there's going to be a strong dollar number, or whatever happens is NFP is going to send the dollar up, and that's what unfolded. And then you got to be quick for taking profits, because I would have just have my limit here, and I would have been taken. That's that, and then it just held and just fell lower. Okay, so that's Kiwi. New Zealand Yen. New Zealand Yen is another beauty. It's the same setup as Kiwi, exactly the same. Yeah, so I don't need to go into that. Took out the stops, and then so that's why I look at, if I'm for example, if I'm taking the euro, I'll not just look at euro dollar. I look at euro CAD, euro Aussie, euro New Zealand. The more euro crosses that are lining up at the same time for a long, if I'm looking for long on the euro dollar fiber, then it's more confluence, isn't it? And same as that is sold off, and I would probably prefer New Zealand Yen because my bias was lower, and that sold off 197 ticks. You could have, whatever you took profit, and I still think it's going low, because if you look back earlier, I mentioned this monthly candle's getting filled in now, isn't it? So we've got, on a higher time frame level, we've got this breaker here acting as a bullishness, breaks down, roll reversal, and bearish bias, and it's filling in this, and this is going to get taken. I could almost say for guarantee this is going to get taken, but I don't want to, because then it's kind of get tired. No one can guarantee anything, but more than likely this low is going to get taken minimum, and I think it's going to fill all this in. So if you were on a 5-minute chart, low time frame chart, you'd be targeting this, and so obviously a monthly can take time. I hope it does retrace back up, because I want to get on board. But you see in yourself, equities are falling, yen pairs are falling. Long term, I'm thinking this is all gonna get filled in. So there'll be plenty of opportunities to get on board. Don't worry about it. Yes, it is recorded. So that's that. Someone saying it's lagging. Is everyone else okay with this? Is everyone else keeping up with this, or is it lagging for everyone? Okay. Well, it's recorded anyway, so don't worry about it. Can you understand what I'm saying though? Is it making sense what I'm saying? I think I need to restart my computer, because it's been on for like about a month straight without shutting it off. I just put it on high standby all the time. It's recorded, so hopefully the recording is clear. As long as you can make me out the basic points, you all know this stuff anyway. It's just we're all just going over it again. So that's New Zealand, yeah, that's cleared. Everyone so far, it's cleared so far, yeah. And then I want to move on to the good stuff, like the DAX. Okay, so everyone's with me so far, right? Now here's the DAX, right? So what did I do in the morning? So in the morning, obviously looking for a bearish bias down. So it's come up, and I was gonna look for a setup here short first. I thought maybe this would set up, but it just doesn't look right to me. So I thought, okay, let me just let it unfold. I mean, if I'm not sure, then I'll just wait for a breakdown, because I thought this gap's gonna fill and go lower. So it didn't really set up for me, and it went pushed up, and it started to break down. And once it broke down, I was looking at this, and this fractal was the same as this earlier. So you can look at my Twitter for that. I posted it. So what happens here? So if I delete this here, it's come up, and it's broken down. It's a little block here. It's just these little blocks I'm getting in on. This is a breaker here. This one, I prefer to use this one, and that kind of led to the stop rate and then breakdown. And I thought, okay, this is setting up here, and then see these blocks getting respected. Bullish block, sell off. Bullish block, sell off. And then I thought, okay, gap fill. So I sold it here, and it fell 50 odd ticks. I thought I was getting all excited. I thought, oh, yes, this is going to go all the way down here. So I trimmed some here, and I put my stops flat, and then it started going up. So I thought, I'm going to let me see what other reasons why it could go up. So I was looking at the S&P at the same time. Now the S&P at this here, they're really clean highs here, so that just put me on a little angle. I mean, these yen pairs could, these equity indices could shoot up. Then I was looking at the dollar yen at the time as well. So if I pull up a dollar yen chart, because they correlated, aren't they? So the dollar yen was like, these stops hadn't really been taken. So I thought, hang on a minute, something's not looking right here, and it's just, as you can see, it's shot up. We were expecting a strong dollar based off of the thing, as I've explained earlier. So I did enter again here. I did smaller size. I thought, because I wasn't sure, I shouldn't have taken it. I broke my rules and I shouldn't have taken it, but it happens, and I got stopped out on that. So this is the point where I was in. I was at Friday prayer, but I was looking at my phone, and if you look at the chart I posted, I had this marked out here. This is the bullish candle and sell off. So I had this posted here, and then I tried to get on board here, but my internet reception was crap on my phone, and every time I tried to enter, it was like kept recording me. And then I was looking at the 1 minute chart. I know I don't really look at the 1 minute chart, but with DAX it flipping works nicely. So gone up and then ripped that down, and I thought, okay, I'm gonna sell it. And at the same time, what did S&P do at the same time? The S&P came into this block here, took out the highs, right to stop and selling off. So that's like, confluence, isn't it? So you don't want to just look at one thing. You want to look at everything going on. Obviously, overall, we still got a bearish bias because we got these clean lows here, just to be taken, and obviously lower. So I didn't get on board here. I thought, okay, let me wait. Now go to the 5 minute chart, right? Actually, that's a lie. It's a 1 minute chart for the time. And where did I get in? So I'm looking at this, right, and it's a run up, and it's broken down. Hang on, did I post it? Okay, so I had this marked out here on my chart. I had this 5 minute. I thought, okay, how I'm gonna enter this if it breaks down? Because I don't want to like get in random places and retrace back up. I want a good risk to reward. I want to place my stop loss in a, I don't want a massive stop loss. But if the price was down here and I entered, I don't know, it could go all the way back up here. And I don't want to keep my stop loss 60 odd ticks and then playing for the good stop with 200. So just over 3R. But I wanted more than that. Well, I'm just not comfortable with 60 pip stop. So I thought, okay, let me just wait. So I was just looking at this then. So I seen this. So I seen this here, it run up and it breaks down. Now look carefully, right? It's price action fractal, so whatever works on one time frame should work on all the other time frames. So how did I? So I did enter here. So it's come up here, and I'm anticipating this 5 minute break I've just marked out to go. So we've got a little stop rate here. So okay, and then a breakdown. What caused that stop rate? It was this here. So within this you can run up and then push the market down, broke down here, and then I entered here, this arrow here, and I sold it there, and I entered a bit earlier, I sold it there, and then it sold off. So with that 1 minute block was holding. Now what would have been more sensible would have been fine. I'm comfortable trading it this way anyway, but okay, this was when I tweeted to you the same setup is happening. So if you was watching the DAX with me, you would have seen that I said watch the 5 minute, and as soon as this broke, retested it, sell it here. I would have kept. You could have kept your stop loss here, 19 ticks, but I kept my I would have preferred to keep my stop loss here and just keep a mental stop loss. So obviously it is a whippy market. DAX is really whippy, so sometimes it can just spike in. But if it's correct, it shouldn't really break this. If price would have started going too deep into this and breaking it, then I would have said, okay, I'm looking to cut it. But the good thing is, you came up there, sold. You could have sold it. So on my other accounts, I sold it here, and then what's it called? Kept stop loss here, and you know where you're heading for. So all this was manipulation upwards. Take out the stop, and now you know it's heading down for the gap fill. So those that are longer, are starting to sweat now. And that's how you gotta think of it. Well, what is it? What they're trying to do? All this was fake, and then you're just looking for opportunity. So where were they buying? They're buying here. They were buying here. All the place they're buying, they're gonna reverse that role. So if you look, so this you could have gone on board here, sold it wherever you want to take profit, and then I tweeted, look at the 11:45 GMT candle. So this was another third opportunity to get in board. So this is the 11:45 candle. It breaks that, retest back up. If you didn't have the balls to sell it here, wait for a little breakdown and an order block to form, and it formed here. Keep your stop loss there, and then that gave you 79 ticks. So you could have got at least 20, 30, 40 out of that. So 1, 2, 3 opportunities to get on board this. And where was your target? Your target would have been this gap fill play here. I mean, obviously the gap's filled here, but then you go, if you draw this out, extension levels, the confluence of the 161 point extension bang on with the gap, complete gap fill here. So because this was the open, and then I got out here. So you can see this here. My exit was here. I seen this bounce. I closed it all, and then obviously it's still weak, but I'm done then. So is that clear? So that's why you don't need to worry about missing opportunities. Okay. And I just played the DAX today, so I still expect a weakness, but we can always get on board later on. And it was a similar play with the S&P as well, but I didn't take that. DAX was just clearer, so that's how I took that. Dollar yen was selling, and then pound yen gave an opportunity. So this is his hindsight now. Obviously, I'm gonna do it hindsight, but expecting pound weakness at the same time, and the pound yen was down here at the time that before after the NFP, and you're expecting dollar yen weakness as well. This would have been a nice sell here. Probably would have entered at the close of this candle, or wait for a few more candles. So wait for this candle to close. So as soon as that closed here, I probably would have kept a stop loss here. But I would have said to myself, okay, if it starts breaking this high here, then I'm gonna look to cut it, or at least cut half of it. But if you're correct, then you're correct. You know you're correct straight away, and it sells off 222 ticks. Now where would you have targeted? Obviously, the stops down here. There's inefficiency to fill in. Boom. And that's how you would play the pound yen. But that's hindsight, I'm not gonna lie. But the main thing I wanted to go through was the DAX play. And I was doing this off my phone, so I couldn't really post proper charts at the time. But you all understood that, right? You all understood how I use breakers. Sometimes if I'm not sure a breaker is going to hold, I'll wait for an order block to form once price breaks that breaker and tests it, and then the retest of that. So in this one, I just enter straight away. But this one would have been like a nice example of holding straight away, as long as the target hasn't been reached. So when you enter on this breaker here, you'd expect so yeah, that's that. I'm just going on now. But everyone clear, yeah? Okay, I'm just gonna stop the recording here. Then if whoever's got questions, so hang on.